and officially welcome out everyone to the Market Watch Group Trading Foundations working sessions this month, all month May. We just went through and talked about a complete trading plan, really getting into the granular level of some of those sections that maybe you've struggled with, hopefully, and how to connect one section to the next. They're all very much intercorrelated, making sure we understand how the information will move from one section to the next and help create just a more cohesive trading plan. Those were the first two. Now we're moving on to the record keeping side. Back to pink sheets again. What's pink? This is like you're saying that the slides are pink? My PowerPoint? Very weird. Very, very weird. Bob and Mike, good to see you. Love your avatar. Are either of you seeing pink or are you seeing white? Let me know. And Sandy just popped in. Oh, you don't see anything. Well, that's not great. Steven sees it in pink. Black box with 3 dots moving. Sandy, Mike, anyone else want to weigh in on what you're seeing? I'm a little concerned. All good, Sandy said. Okay. Well, I mean, it's telling me that what's sharing is a white version of my PowerPoint. Let's just get forward and see if we get to something better. Okay. So let's talk about it. Quickly, let's hit the disclaimers. As always, what we're doing is for education and illustrative purposes only. There's no recommendations for buying or selling. We're not brokers. We're not advisors. We don't give guidance. We don't give recommendations. And what are we going to do today? Record keeping spreadsheet. Now, because I was putting time into this, I haven't had a chance to load the trading plan, the MWG resources or the downloads. That will be there. That will be there by this weekend where I'll be able to. So if you're new and you're looking for the assets right now, you should still have in your emails links to the welcome doc and links, and those will always be good. I'm going to leave those. So if you ever just like save that as a favorite, you can just go there and grab your downloads from there. But I'm going to have those same links here in Discord so that wherever you are, if you're like, hey, I need a new copy of a trading plan, I need a new blank template of a trade log, I want this, I need this link to get to the search, the pre-filled search, or maybe you want the link to the sector rotation, whatever it is, anything that we have will be there. Okay, good. Bob sees it. Okay, everyone should see it. So we're going to go to the record keeping spreadsheet. So I'm actually going to just go ahead and get rid of that. Okay, and now if I'm sharing an Excel doc, Steven, is my Excel doc coming black and white or is it coming in pink? And for everybody else, are you now able to see this spreadsheet here? And I'm going to just kind of talk through this thing now. I didn't get it where I wanted, unfortunately. Okay, still pink, huh? So very, very strange. What if you pop out and pop back in? Did you try that? Turn it off, turn it on. That's my basic magic formula to anything. Well, did you reboot it? Did you unplug it? Wait 30 seconds and plug it back in? Because Once you get through that, you got to go to tech support. For me, determined said yes. Okay, good. Now, what am I looking at here? This is the Market Watch option log. The Market Watch option log. So here you can see, and it's going to look like a lot, and you're like, oh my gosh. And I'll tell you that I've just been kind of working on this, copying, pasting, working on chunks. Because like I said, I'm trying to get it to everyone's is going to be so very different. But we're going to just kind of talk through what are the different things, what can I do with it. It's going to take us a little bit. But if you notice that what I have here, I went in my dashboard, if you look at trades 1 through 25. So here's how this spreadsheet works. Some of you have probably been working on this for a little bit. Some of you, this may be the first time you're seeing it. So first things first, let's take even a step back still. Welcome doc. This is what I mean right here. This is where you have the ability to find things like our options trading log. You can download that, right? All of these different links. I'm going to move this, but it's available now. I'll even just paste it in our chat here if anyone wants to just pop in there and grab something while we're talking, okay? Because in there you have the ability to download the trading plan, and I'm going to put copies. I'm going to upload these as samples. So we've been working on this sample trading plan here, where I go through and I look at strengths and weaknesses and commitment, and right, you can see this is fleshed out with rules and routines and all kinds of stuff for you to look at. Gain some inspiration, right? Gain a little inspiration. Now, I'm going to also have this, so you can just kind of see. I don't know if I'm going to post this. I don't know if this is, or maybe post a video talking about, I'm not sure yet. Like, I don't know that it'll benefit you to see a different log. You just need to fill yours in. So step one, we lost Mike P. All right. Step one, fill out your log. Now, if you look, this starts here in the trade date in January 5th, and it goes all the way down here to December 31st. So this is 100 trades over the course of a year. That's 25 trades a quarter. That's not very much trading. That's 8 trades a month. That's averaging 2 trades a week. That's not much. That's not much, right? 2 trades a week. That's 40% of what you would have if you averaged 5 trades a week. So if you ended up getting 20 to 25 trades, this dashboard, this 1 through 25, each one of these, for me, it represents a quarter. Still pink after the reboot. Very strange. Man, that's frustrating. I don't know what to tell you. Post a video, please. Okay, will do. Request granted. And this video will be available. Don't forget that. This walkthrough where you're going to be like, okay, I now have a template. I'm going to start working through it. Now here, you'll notice that each one of these, and you'll go down to the bottom of this, is beginning date and end date. So whenever I come to this dashboard, I have a lot of information available to me. Here's what's interesting, okay? On the trade log, if it's in white, you can fill it in. If it's in gray, you cannot. These are locked. You cannot play with the formulas. These are all formulaic, okay? All you can do is enter this information. When you get to the dashboard, it's the exact opposite. There are only 2 cells on each of these quarter or 25 trade blocks. How much money did you have when you started? And what level of risk are you looking to have with this? Right? So is your risk 1%, 2%, 3%? Now this is why if you're trading 2 different systems with very different risk levels, you probably want to keep different trade logs for each system. You could keep a combined log, but when you see it, you have to recognize that the risk per trade the trade risk is going to be all over the place because some are 1% and some are 4% or whatever it may be, right? But yeah. And if you're only trading one system in the beginning, great. You put your trade risk in. So how big is your account? And what's your trade risk? And you'll see the first thing it does is it tells you what's your risk per trade. If I have a $50,000 account, 2% risk, that's $1,000. That's the most I'm willing to lose per trade. Okay? We're going to stop there. There's a lot more down below. And I'll get to why some of it's not working and I'll clean it up and we'll have a little bit more detailed conversation even still next Tuesday when we have part 2. But first, let's just talk about filling out and what we need to have. So this template will always be the same. It's going to look just like this. The only difference will be that there will be a second type of log available thanks to Stephen, who's in attendance, that has the ability for a third exit. A third exit. So if you scale out half and then you get out again, this is fine. But if you sell one and then you sell another and then you carry the last little bit in your trade management, well then you would want a log that allows you to have 3 exits. And I'll make sure that that's available. They'll behave exactly the same way. It's just that you'll have another set of these 3 here. And then all the math does the same thing. It all ends up in the same place and works the same way. Okay? And it may look like a lot, but I can tell you right now, you're not going to find an easier to complete spreadsheet where I don't have to do that much work. If you've been filling it out, please give me an amen because I worked hard for this. Like here's what you need to understand. When you first take a trade, all you worry about is right here. 6 columns. Symbol, obvious, right? What stock are you trading? What stock or index or whatever? What symbol is it? Okay, so that's an easy one. That's pretty self-explanatory. But if you ever get lost, if you come up here, these little red marks means, what is that? Oh, the underlying stock symbol. There's a little guide for me up here. Okay, column B, system. Now that's one where you're like, what do you mean system? That is self-defined. This tells you what is the trading system or advisory service used to take the trade, or another way to put it is the trade source. So for example, if I have a set of rules that I've developed, I might call those Scott's rules, and that's a system, Scott's rules. And any trade that comes via Scott's rules, I will tag it Scott's rules. And that's going to allow me to sometime isolate it and see only Scott's trades. And I can see what's the expectancy and the average win and the average loss and all the variables that help me to better understand, is that the right system or do I need to make some changes or just get rid of it? Okay, so if you have a newsletter, if you subscribe to Trader Johnny's Superfly Picks, I just copyrighted that name. I'm going to put a .com on that and start an advisory service called Trader Johnny's Superfly Picks. No, I don't think anyone would buy that. But if you did subscribe to that and Trader Johnny gave you picks, then you would want to identify that that's where the trade came from. We don't want just trades floating around wondering where'd that come from? Who gave me that trade? Right? Okay, that's your first 2 columns. Column C, trade type. What does that mean? This is an options log. What type of option trade is it? Now, if you're a newbie, you're probably only going to have a log that looks like this. You're just buying options. You buy calls, you buy puts. That's it. Now, some of our spread trades we do can be a little more complex. I will warn you, but we give plenty of videos and supporting information to help you learn and understand it. But for now, let's just go the basic route. What are you doing here? I've got calls and puts. Calls and puts. That's it. What did you do? I bought a call. What did you do? I bought a put. If I'm bullish, I buy a call. I'm bearish, I buy a put. So you'll notice the next column, long or short. Enter long if you entered with a debit, meaning you paid. I bought it. I bought an option. I bought a debit spread. I bought a calendar spread. I bought a butterfly. Enter short if you entered with a credit. I sold a naked put. I sold a credit spread. I sold an iron condor. All of those would be short trades. The long short is telling the spreadsheet which way to do the math. Do I subtract my entry from my exit or my exit from my entry, right? It's different when you enter as a buyer or a seller. So that's just helping make the spreadsheet know which way to do the math. You'll notice here, everything is long because I'm always a buyer. When you start doing naked puts, when you start doing covered calls, when you start doing, although covered calls, if you enter the stock and the call at the same time, you would actually still enter that as a debit because you bought the stock, right? That was a debit trade. You sold the call. So if you entered the call only. Now, if you have questions, just throw them out there. I'm watching. Don't wait. Don't wait for me to take a break. Just put it out there and I'll see it and I'll answer it. But hopefully this is making sense. So this is all long. It's all buyer. Okay, next column. Super easy. Trade date. What day did you do it? That's it. You put the date in there. Boom. In. Okay. Actually, I lied. I'm a liar. I didn't mean to be. It's 7 columns because you have to put in what price. Now you'll notice these look cheap because this is the actual option price. We know that you have to multiply by 100 to make that per contract. That is a per share price. That's how options are quoted. But an option itself is a contract that represents 100 shares. So we have to take that per share price, multiply it by 100. That becomes the per contract. That is automatically accounted for in the spreadsheet. You are entering what you actually got for your fill price, your quote. So you'll notice here, this should be expressed as an option price. Don't put in $400 because it's going to think that's actually $40,000. And you're going to be like, what's going on with my spreadsheet? Well, make sure your decimals are in the right place. So that is a literal, what was your entry price? I paid $1. So for example here, let me even show you. Let's go look at a trade table here. So if I'm buying a June option, let's buy a single option. If I buy a June out of the money call, you can see it's 720 by 724. 724, that's my price. 724. Now, if I actually did one contract of this and I said confirm and send, this is going to cost me $724. $724. Yeah? Because that's the contract price. That's what the spreadsheet is also going to do. You are entering the option price. Make sure that's clear. Okay, moving on. Number of contracts. You decided how many contracts to buy, so you put that number in here. How many contracts? That's it. Recommendation is do it the day of. That's how Bob does it. And it works well for him. I tried to do that, but I usually end up reconciling my spreadsheet on Sunday. Right? So I don't like to go past the weekend without my trade log updated. Otherwise, it's going to get overwhelming. Right? That's the first thing. So when you enter the trade, you put this in. Then when it's time to get out, you only have these three columns here. Whoops, right here. So now, what do? So let's just take this Apple trade. This Apple trade, we bought a put on January 5th for $2.35. We bought 10 of them. Okay, and we sold exit number 1. That is the exit price, $4.59. But let's say we didn't sell 10. Let's say we only sold 5 on January 11th. And then we still have 5 more. Oh, that's the second exit now. So now exit number 2, we held on because we thought we were going to make a little bit more money, when in fact it actually dropped down to 375, and we sold 5 more contracts, and that was 3 days later. So that was 1/14/23, and you'll see number of days. That's 6 days for the first part, 3 for the second, 9 days total, right? So that's just something to be aware of. And you'll notice that we made 1,100 with the first 5, but we only made 700 with the second. That doesn't really matter. What matters is the 1,800. That's the net amount right there. So exit number 1, what was your exit price? Number exited, how many of your contracts of your 10, and on what date? If you sell them all, there is no second exit, right? If you bought 5 and sold 5, there's no second exit. There you go. I enter it when I put my order in. I love it. It's a great technique. Okay, now that is now. What else do I have here? There are only 2 other areas. Even though this over here says long short, you can't click that. I need that. There's nothing else over here but things that I need in the spreadsheet to help us. Oh, you can't even see it over there. That's fine. So you don't even have to worry about that. What you have is here, commission. So if I'm paying 75 cents a contract, and I did 10 contracts, that's $15. So I might want to put that 15 in. Now, if you watch my gain loss at 18.20, when I put that 15 in, it drops to 18.05. So it subtracts that out. Net commission. And when I'm done, I'll have an easy way to add up my commissions so I know how much I paid in commissions at any given time. Okay? The only other thing I have is this trade comments, and it looks very small. But this is my trade journal. Anything that I could type forever. It'll just all fit in here, and I can go back and find it when I need to. Here's the way I would express it to you. If it seems at all interesting or important, write it down. If everything just went normal, you were either right or wrong as expected, great. But if you were like, I thought this or this happened or the market, I was a little concerned the market was looking soft, and you're like, oh, okay, let's go look at my market posture, because maybe you had 2 or 3 trades that felt like that. So this is your trade journal, because 3 months from now, you're gonna spend a Sunday, couple of hours, just going backwards and reflecting and saying, hey, I had a really good Q1, right? January, February, March, I had a really good Q1. So what am I going to do? I don't want to just be like, pat myself on the back. I want to go back and see, what did that look like? What was I doing? Was I staying in trades longer? Look at your average days in trade. Was my reward to risk ratio good? Or was I keeping my losses small? I want to know. I don't want to just be like, oh, it's a great quarter. I made a bunch of money. Good for me. Let's learn even when it's a funny thing, because a trader one time said, I never learned anything making money. Which is another way, I think, of saying experience is what you get when you didn't get what you wanted. Right? We all get plenty of experience. I disagree. I think we can learn. When we're winning. I think we can start to understand, what does normal, successful, when I'm just in my flow, when everything is good, what does it feel like? What does it look like? So that you can recognize faster if you start to move outside of that. Oh, that doesn't feel right. Oh, this is changing. Love it. Glad you got it solved. People helping people. That's what we're here for. Okay, so questions? Is this all making sense as far as what we're doing with entry? One of the things I'm going to do is I want to come and get a few more of these extra trades. I only got one in for most of these. And so if you look at my dashboard, so let's go to the dashboard now and let's start talking about what does this show me. Okay, so here's what it's doing. You'll notice that on this first column, I have everything I need. But on the rest of these, I have a divide by zero error because I don't have extra scale outs. So that's just, I mean, if you don't have extra scale outs, it doesn't matter. But whereas this one, you can see I was in for 5 days, then 3 more. Obviously, I thought I had all my decimals set. I don't need that many decimals. I would probably keep it at maybe 1 decimal, 4.2, 3.1. Maybe even just round it to days, to be fair. I don't know. That's a personal. Problem is it's locked, but I could show you that. Yes. Great suggestion, Bob. Love that. Format dates to include year. It's funny because, yeah, I agree. You do want to see that, 100%. Okay. What is the log doing now? Now that I went in and I filled out 7 columns, 7 cells on entry, 3 if I exit, 3 more if I exit again, right? 3 cells at exit. Minimal amount of time. I can promise you that. And when you think reward to risk, like what do I get for that work? I get this. I get this. Every column is 1 through 25. Now, here's what's interesting. A little story for you. In a previous role, I taught boot camp style trading seminars. We would meet. It was a 15, 20 students, 3 instructors. We'd be at a hotel, lock ourselves in a room for 8 hours a day. Very cool. It's just an amazing environment. And we'd see I did that for probably 4 years. So I probably worked with about 4,000, 5,000 traders over that 4-year period. That's where all my trading psychology research comes from. That was my laboratory of different traders in different stages with different mindsets. I worked with a mathematician and a statistician, and I asked them the same question. I said, well, what is what you would consider to be the smallest statistically relevant sample size? Right? Law of small numbers says if I try to assess myself after 10 trades, it's meaningless data. Like there's no outliers. There's nothing there. What is the number? Steven jumped it. Oh, he nailed it too. 33. 33. So you might be thinking, wait a second, Scott, that makes no sense. If it's 33, then why don't you have trades 1 through 33? Because number 1 through 25 is cleaner. Number 2, I'm impatient. I want it just a little faster than 33. So I accept that the first 25 have a slightly lower statistical relevance, but by the time I have the second 25, I also have the first 50 working simultaneously, so I can live with it. Huh? What do you think about that, math? In your face. I don't know. Maybe not. Okay, but 25 at a time. Bob's in with me. He's like, to hell with you, math. We'll do it our own way. We march to the beat of our own drum. 25 at a time. I have winners. I have losers. Numbers. I have percentages. I'm more concerned with the win rate, but I do like to just kind of see it. So I can see quickly patterns. 11, 15, 14, right? So what's happening? I've got winning percentage, losing percentage. I've got average win when I'm right. I've got average loss when I'm wrong. I've got reward to risk ratio. I've got expectancy. Ding, 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 ding. That's a big one right there. Expectancy. Right? That expectancy is huge for us. That's our most important ratio. Second to that is Kelly, which is our risk parameters. So if you remember me yesterday saying 12% risk in a trading plan. So here's what's interesting, okay? Statistically, Kelly criterion If you take 70% of Kelly Criterion's risk level, you'll make 90% of the gains. The way that risk works, I know you're like, Scott, that sounds like black magic. And I'm like, I know. It's a little bit. Now I'm actually back in line with math, because in this case, math is our friend. So, whoa, I just want a pen. Give me my pen. Come on, Epic Pen. There it is. Okay, so the way risk works, why do I have two of these? Is here's my risk level. Don't worry about anything else. As I take more risk, I make more money. And then all of a sudden it starts to slow down, and it like a bell curve. And then it comes back down, and then it flattens out, but it doesn't flatten all the way out. It actually does this. That's how risk works. So you can't have an assumption the more risk I take, the more money I make. That's true to a certain extent. Here. How do I find that out? Huh? Black magic. That's how. That's what we're doing here. No, Kelly. Magical stuff though. There's a book called Fortune's Formula. Super interesting book. It's actually literally about that formula. And so John Kelly, anyway, goes into a lot of different things. But we can figure this out. But what we're saying is that if I actually go to right around here, I'm at 70% of the risk level, okay? 70% risk, but I get 90% of the gains. So that makes a lot of sense to me. How do I then practically account for that? Here's how, okay? Let's go. I take this 16%, I multiply that by 0.7, 11.2. That's my heat, 11.2%. If it's a good market, I want to be at that level, and I would actually be okay if we even veered above it towards 14, 15. In a worse market, I want to drop it down and be at less risk, but that gives me at least a watermark to shoot from. This is what we're doing with this. This is why we keep records. Risk should be very specific to you, to your what you've achieved and what you're going to do, right? So this is I think where it really makes your trading, even if you're just trading part-time, it feels like you're doing it for, like you're watching the numbers, the data. Everything means something to you. Every trade is telling you a story and informing this. So you can see, what is the story here? Well, the first 25 trades, January through March, pretty good. He did pretty good, this guy. Trader Johnny, with his Superfly picks. He did pretty good. He made a 20% expectancy, right? He was right less than he was wrong, but he was 1.74. So that gave him the edge he needed to be profitable and achieve a 20% expectancy. 20% expectancy, 25 trades. What did he produce? That's an 11.78% return. That's not bad in a quarter. What, everything under control. That's a $50,000 account. 2% risk per trade. That's well under our parameters. 1%. Now you'll notice 2% at $1,000. His loss to risk ratio was 107. So I would advise him to be a little careful. What does that mean? It means he was only supposed to lose 1,000 a trade, and he lost 1,070. So how good was Trader Johnny at cutting his losses short? Not good at all. Was it detrimental? Well, he was profitable, so we can live with it. If we weren't profitable, that would be something we would try to fix, and it might be something we try to improve. But for now, we're like, hey, okay, what else do we know? As I said, 11% return. Sorry, I said 11.78. That's the Kelly. 11% return. We're average trade, 5 days when we were right, closer to 4 when we're wrong. Yeah, everything looks pretty good in there. Okay. Now what? Now we move to the next set of trades. Whoa, look at this. Johnny, right 60% of the time. Well done, Johnny. Your Superfly picks are Superfly indeed. Only, that's not the whole story. It's not about being right. It's about making money. Did Johnny make money? Well, he did. He did. But this time he only made $200. That's not great. So if someone has 80 for Kelly, oh, no. Stephen, remember, Kelly is not about return. None of these are returns. That's down here under net return, right? These are metrics. Kelly is about identifying optimum risk levels going forward. That's what Kelly is. Kelly is a forward-looking metric that says if we expect to, so come over here to expectancy with me. Let's go to cumulative results. You're looking for like, what's the bottom line? My military guy wants the bottom line. What's the bottom line? The bottom line is here, net return, 39%. That's the bottom line. That is your empirical return, 39%. Okay. Trader Johnny, I will subscribe to your Superfly picks for another year. And if he keeps doing this, I'd keep subscribing. Because I made $19,000. So if I only paid $200 a month, then, right, that's pretty good. Okay? Does that make sense, Stephen? Now, come up here. What do we have? Expectancy, 20%. What does that tell me? That says that for every dollar I put at risk, I expect a 20% return. Not every win, every dollar. Every dollar put at risk, I expect, and that's why I'm positive. That's the bottom line. Am I a profitable trader? Kelly's what tells me that I'm going to keep my heat level around 11% as a standard, with the willingness for it to go up towards 13 to 15 in a strong bull market, and a likelihood of it dropping down near 4 or 5% in a choppy, lower scored market, right? So that's going to help me with assessing and assigning my risk numbers. If the expectancy is greater than 100, greater than 100 is phenomenal. If the number is positive, you're doing good because that means you're profitable. Here's something. When I haven't done it for a long time now, my kids are older, we don't go out much. We used to drive out to my in-laws out in California. We'd get on I-80 and drive west from Utah. Well, you'd get to the border, Wendover, Utah, affectionately known as Bendover, Nevada, right? Border town. As you get there, you would have billboards that would say, loosest slots in town, 98% payout. And it's funny because, they're just trying to trick you. 98% payout, 98%, that's high. Oh no, what they're telling you is that you have a minus 2% expectancy. That every dollar you put in, they'll give you 98 cents back over and over and over and over again. It's a funny thing the way they do that, right? But everything that you sit down at in Vegas has a negative expectancy. That's probably the best it gets. It gets worse from there. The difference between a gambler and a trader is a positive expectancy. Right? That's it. That's the difference. If you have a negative expectancy as a trader, you're not trading, you're gambling. You're hoping something better turns up. We need positive expectancies that say, oh, I found my edge. I have an edge, whether it's that I have a better reward to risk ratios or a high number of win rate or a combination. And so a positive expectancy just simply says that based on how I've performed, every time I put $1 at risk, I have a positive return. I make money. Trying to understand if the risk level is too low. Well, so now what you're looking at then is not expectancy. What you're looking at is Kelly. So if your Kelly is 30% and you take that to 21, and then you say, hey, you know what? I'm only in 4 or 5 trades at any time, and there's only 2%. Well, you're 8 to 10% at risk at any given time, and your Kelly says you can be 21. So yes, in that situation, that would definitely give you data-driven information that says you could incrementally double your risk. I don't mean overnight double your risk. I mean 10 to 11, 11 to 12, right? You slowly build your tolerance because you're doubling your risk. But it would inform you that you can take more risk. Kelly is what you're looking for. Kelly is what tells you how much risk can this system sustain. What you need to understand is how much risk have I been taking at any given time. That's what you're comparing to. Do I have an ability to take more or less risk? So, a Kelly around 80. Now, here's the thing. You probably have a high frequency of win, which means that if you don't expect to be wrong very often, you can theoretically take more risk. We need to have remember that Kelly is the mathematical. We need to balance all of this with the psychological. How much risk can I sustain? So what I would say is, yes, you can take more risk. I would just start incrementally taking more and then watching the numbers as they come in. Okay, now we move on to next set of trades. 60% right, 40% wrong. Much better, right? Look at that. More right. But then what happened? Oh, man, things fell apart. Average win, 449. What the hell? Average loss, 652. Now, the good news is that the average losses dropped down. But the bad news is 1% expectancy. Like it was just barely breaking even. Right? $200 net profit. Woo! Okay, we just got to the end of Q2. What does this tell us? Well, it tells me I better go back and analyze all of Q2 to figure out what went wrong. What happened here? Okay? How am I going to do that? Well, I'm going to drop down below here. And again, the first thing I'm going to say is, you can see I was willing to lose up to 1,100 and I was only losing 650. So that's good because this wasn't a great market. So I probably dialed my risk back a little bit. B, my average days went from 5 to 4 and 4 to 3. So I was getting out of trade sooner. When would we get out of trade sooner? Well, when the market's a little more choppy, right? And now what? Now I'm going to realize that this is from April 1st until July 6th. So I'm going to come over here to the trade log and I'm going to say, all right, we need to get from we need to get from April 1st here down to right about there, right? So now I have this grouping of 25 trades that I can start to say, ooh, what went wrong here, right? And I'm going to start by something like this. If you look, well, let me blow this up a couple clicks. And let me grab my pen. I'm going to find something like that, right? Average, that's a $1,250 loss. That one might not be in this, but I'd still take that. That's a $1,000 loss. So I'm going to start with those two. I'll move on to this one. What am I looking for? Any loss that's above average. Here's another one right here and another one right here. So there's 1, 2, 3, 4, 5 trades right there. Those 5 trades. Those 5 trades probably are a significant portion, right? 2,000, 3, 4, 4,600 right there. Those 5 trades were 4,600 of the loss of how much? And this is why I like the sheet, is I'm able to do this, right? 4,600 and I only lost 65 in the whole 25 trades. So a big chunk of that, 2/3 of that was from only 4 or 5 of the trades, maybe even more than that, right? 70% was from only 5 of those trades. So what am I going to do? I'm going to dissect those 5 trades. Why did those go wrong? What did I do wrong? I am not going to go into the next 25 trades making those same kinds of mistakes, right? Now, you'll notice that the next set of data, the losses actually get worse, but the trading gets much better. The winning percentage stays high, 56%, but I'm able to move my reward to risk ratio up to that 1.8 type level. And you can see that's what we're looking for in production. That's a hugely productive. So Steven said, what am I looking for? Number one, I want to be positive expectancy. Usually when I'm working with someone one-on-one, the first goal we set is 20% expectancy. That's what we're looking for, 20%. If we get 20, we ask for 50. After that, whatever we can do, right? If you're at that point, just keep on keeping on. 57% expectancy, that's in that level. You can see the Kelly really strong. Now you might think, oh, the Kelly's 31, so do I now adjust my Kelly? No. Kelly cannot be informed by 25 trades. Kelly has to be informed more like 50 to 75 trades. So if I have 2 sets of Kelly in a row at a similar level, then I would say, okay, yes. Conservatively, 3 in a row is what you're looking for. Okay. Questions about anything so far? Is this helpful? Is this what, for some of you, have you started to make these connections with what you're doing and really seeing your trading? I tell people, if someone gave me this spreadsheet, nothing else, gave me this spreadsheet filled out with 100 trades, I would know more about you in 5 minutes with that spreadsheet than I would peppering you with questions for 2 hours. You know why? Because number one, and I'm not saying people are liars, but they definitely hedge and they tend to tell things in a positive light. Numbers don't lie. Numbers don't spin. They don't tell things in positive or negative lights. They simply tell the story. This is the story we asked for. This is the story we need. Great. I want it. I want to know what needs to get better. What do I need to do? I need this to get bigger, this to get smaller, this to stay where it is. Now, in this case here, you can see good Kelly, but I'm not going to significantly jump. But this is a 20% 25 trade period. 20% in 25 trades. Are these outlandish numbers? You're 50-50, basically, and you're not quite 2-to-1 in reward to risk ratio. We could be less than that and still quite profitable, right? This. I hope you see that when you do the record keeping, you start to find, you understand what's achievable, what's manageable for you to attain. We get to the last quarter. Trader Johnny, he's feeling like he's riding high. His super fly picks were extra fly in Q3. We move on to Q4 now, trade 76 to 100. So you can kind of see now you're also able to establish like what's going on here. Over 3 quarters, my average loss is 950. So I'm starting to think I'd like to be near that. That's my level. And if you notice, 950 is, I need to make an adjustment here. Very close. Like right now, 1350 is 2%. So yeah, 950, that's not bad. We could live with that. That's a pretty good number. Our reward to risk is 1.28. We know we can get 1.7, 1.8, so we're shooting for that. But if the market conditions get harder, which is what we would assume happened in trades 26 through 50, now we would go back and we would look and we would come up with something. Maybe we just made some mistakes. Great, let's fix them. But if we go back and we're like, yeah, the market was choppier, we tried, we just couldn't get in front of it. if there's a choppy market, let's say that during that 3-month period, the market was down 7%. If the market's down 7% and you made $200 just kind of trying to get it figured out, I think you have to call that a victory, right? Like if you were in the market, you just drew down 7. Instead, you were up 0.3%. Like, okay. And now, if it's a good market for Q3, which it probably was, and the market made 9%, you made 20. We're even better still now, right? And then we get that last quarter. It's okay. It's not bad, right? Our percentage fell off a little bit, down to 52-48. Reward to risk ratio dropped, but we stayed above 1. We still eked out $2,600, right? 4% return. What do you can't complain. If you got 4% a quarter, that's 16%. You're beating the market. But at the end of this, and this is exactly what it's going to look and feel like. It's not going to be, I tell people, don't expect a linear journey. I want 1% a week. I want 3% a month. You're going to have a good quarter and then break even, and then a great quarter, and then you're going to lose for a quarter, and then, right, it's going to, that's how it's going to go because you don't control the market. You're a blade of grass. All you can do is what the lawnmower gives you. But we can live with this. As a newbie, I'm working on a trading plan. Am I correct, or I should be working on something else? You are 100% correct. I hope you are working on this trading plan here, or whatever you're working on, you can hopefully translate. This is our trading plan outline. It's a business plan. Days after scaling, that's the second trade, Bob. After you sell the first, how long do you stay in for the second? So you scaled out. Yes, this plan, love it. If you build this plan and you work on this plan, one section a week, every week, in under a year, you will have the strongest trading plan you could have ever imagined having. That's my promise. You'll have rules, you'll have routines, right? You'll know how you're assessing the market, why you're assessing it that way. This is a very deliberate process. And I as you see the market, showing some weakness, you can start. I think we all agree that we're glad we have it. But I think this is what we needed. Rather than going now, determine there is a trading foundations. These are going to be migrating, but there is a content library and a bunch of videos. You can find them in our YouTube channel, but they are here in the content library, and this is in the emails that I send. And you can see, check back soon for updates. They're coming. I promise. I'm going to clean this up, but you can see here's trading plan videos. Here's market posture videos. Here's our trading foundation course. What are you working on? You want to work on stages of a trade, psychology, systems. Right? You want to work on options. So everything we do, we record, we archive, we try to keep it so you can see it, review it, etc. So I hope that you find that useful, and you will find that soon. That will be in Discord as well. Okay. What else? We're about out of time. That was great. I worked hard to create this story of Trader Johnny. I'm going to rename it that. Yeah, there are several reasons. Yeah, thank you. One of the reasons determined that we moved to Discord is for this community, and phenomenal group, and we add strength to it. It's a great resource. Here's Johnny. Yes, indeed. I'm going to clean this up, and we're going to do more. There's more to do here. You'll be able to find things in these columns that take us back. There's things we can do in here that will help us to identify and improve our trading. I got to tell you, this is when it comes to improving from yourself, right? Right now, a lot of learning is from me. I hope you're learning from me. But eventually, you need to learn from yourself and your experience in this mechanism with the trading plan as the organizational structure. It's all you need. I promise. It's not a matter of if, it's a matter of when. So great to see everybody. Tomorrow is not a morning session. It's an afternoon wrap up. So I will see you guys tomorrow afternoon. It's amazing to see you all. Great session today. That was a lot of fun. I was like a little bit nervous. Like, is this going to go the way I wanted to? I felt like it did, but if it didn't connect for you, send me a comment. Let me know why or what we can do better. Thank you, everybody. It's good to see you all. Have a great rest of your night. And as always, happy trading.